Joining us is Stephen Sheinbaum, the founder of Bizfi, who is speaking at the lending conference. Stephen's company provided over $1.6 billion in financing to more than 29,000 small businesses. Good morning to you.
Good morning.
So, you know, it's funny. You come to us literally as JP Morgan's earnings, the old traditional standby, those earnings coming out, you guys trying to disrupt that business. You know, the question I'd put to you, which I think is the sort of larger question that's hanging out over all of FinTech, and I imagine becomes a conversation at a conference like the one you're at, is, you know, you look out 2, 3, 4, 5 years from now, all of these startups in your space, are they independent companies, or do the big guys like the JP Morgans ultimately say either we need to be your partner, joint venture, or we effectively need to own you?
I think you're going to see more collaboration and working with as opposed to acquisitions with the major banks. I think you'll see some collaboration and consolidation within the industry, but you'll see a lot of ventures like you've seen with JP Morgan Chase. We just announced one with Western Independent Bank Association, an association of 600 banks with 7,500 branches. We're doing a deal with Jack Henry. So you're really starting to see the collaboration pick up speed.
How regulated are your businesses? Because that's the other big piece of this, the compliance issue that I imagine so many of the FinTech companies don't have to deal with yet, but know it's on the horizon.
Right. That's a great question. Our businesses are regulated when we're lending money, but certainly the CFPB and other regulators are taking a hard look at it. We're looking and waiting for the regulation to come. Personally, I hope we have regulation. I hope it comes on a national level so we don't all have to deal with 50 independent sets of rules and regulations. And we just hope that there's reasoned, prudent regulation put down.
So the OCC, I don't know if you saw, said, look, we should have different guidelines for FinTech. One of the things we want to do in this country is we want to spur innovation in this space. And so how can we find a way to actually have some form of compliance, but maybe the compliance should be different than at a traditional bank? Do you agree, and what should that look like?
Well, I think it's going to evolve over time. I think there will be some different sets of rules to play by, but I think at the end of the day, it's going to be about transparency and making sure that the borrowers know exactly what's going on, and that the field is as level as it can be amongst the competitors.
Well, when you look at the space that you can disrupt, and you look out 5 years, what does it look like? Meaning, what are the big banks doing? What are the small community banks doing? And what are the FinTech guys doing? I think you're going to, as I said, I think you're going to see collaboration. So I think the FinTech guys are going to be able to take as little information as possible from an owner or from a business owner or an individual, and to make the front end of the process as frictionless and seamless as it can be. And we're all going to leverage technology and big data to the greatest extent so we can get as much information as possible about that borrower. And I think you're going to see the major banks and the community banks leverage our technology and our ability to make decisions in fractions of seconds as opposed to the weeks and months that it takes now. And when you look at the ability to actually make a good loan and the ability to do it in seconds, and we're going to have Max Lebchin on later, and he's trying to, in literally seconds, offer credit to people. Do you think you can do it as effectively? Yes, I think we'll be able to do it as effectively. I mean, we're doing it now. I think at the conference, one of the things that's coming out is people are really starting to focus now on credit and the decision-making process and whose paper is really performing and not. And I think you're going to see heightened attention to that. But we went through 2008 and 2009. We continue to speed up our decision-making process, and our collection rates and performance continues to improve as we're doing it. How much, in terms of which side of this is going to move the fastest? It's going to be small business lending, it's going to be big business lending. Where's the consumer in all of this? The consumer lending is moving the quickest. Next will be small business lending, and large business lending, I think, will be the last of the three to catch on. Could you ever see actually large business lending get taken out in terms of a FinTech player as opposed to the big banks like the JP Morgans that we're waiting on those earnings for?
We can do some of these here.
I don't think we'll see loans for millions and millions of dollars or billions of dollars being made by FinTech guys without sitting down with customers and really understanding exactly what's going on. I think that's still going to require some manual underwriting and face-to-face communication.
Okay, Stephen, we appreciate it.